So volume is bullish. Unless this is a double top and rolls over and then it breaks the trend line, then that's a really nice short setup, like mwah, very nice. But right now it's bullish intraday. It's stuck, right? It broke the 200, 1, 2, 3, 4 weeks below the 200, still can't figure it out. It's still not safe. This is neutral. There's nothing here. This is a snake, right? Huge day, 3 days. But then this is just, yeah, snake-like. I said that this was the time that was bullish when this Monday at 1 p.m. That was 10. So at 1, that's it. Right here, looked good. It's come down to the 10-week. And I said it could come all the way back down to 42, which is the 10-week and the 78.6, and then start to, you know, digest. I think the market's going to be snake-like. It already is. But this could come back all the way to 36, curve, and then head up higher in mid-April, end of April. We'll see. But this has performed really well. Kind of slow grind, broke. Like any other chart read, basically. Couldn't get above the 8, so that's bad, right? So that was a little weak bounce. Came down to 50. 50 just psychological level, but basically it broke. It's bouncing into the 3-day. It's not holding. It's rolling over. That's bullish. The SPY. Long story short. And I like the fact that my volume indicator has been bullish despite yesterday's 4% reversal intraday. Now, big picture, the whole thing's still unstable. It's still not safe. But right here, that shows volume is coming in. There's nothing wrong with trading long when you have some internal indicator that says, hey, it hasn't broken yet. Be enough. The cuts are going to be enough to really help, and we'll probably head down to that $17 crude mark. The question is when, but on that USO, I'm trying to get, there's a $2 billion front month crude via USO that has to be rolled at, and it's currently at a 16% discount. It is today most likely it's getting rolled. It is literally 55% of contracts need to be rolled at $6 premium. That is a big old spread to spot. And here are the roll dates today. So big old roll dates here. So I found the data and Bob said, yep, it's a big roll that should put some pressure on the oil market this morning, despite the OPEC deal yesterday. So that's what I'm working on. Bankruptcy consulting. Roku still looks very perky, like it wants to pop up here to that 100 mark. Potential chase. Your Netflix upgraded. It's still above that 360. I mean, it's trying. OKTA and MDB both look good for IP for cloud plays. ZS I like. So in a nutshell, Netflix and Roku were the trades that triggered this morning. Well, first, I shouldn't say anything above 360. Amazon bullish above 1957. And let's see if it can get and stay above 2050. So those two. Netflix broke out above this 374 and ran pretty darn quickly. $385 area is next. Roku tried to entice the bears, but it's still above and running up to this trend line of like 100. $99. We'll see. Peloton also exploding higher, at least on a 5-minute. I don't like those usually, but it's still within the Bollinger Band. The one that to me is most interesting is Microsoft because it isn't a squeeze one way or the other. It's going to take the market. But they are coming in for eBay. Amazon taking off. Also the announcement they're hiring 75,000 workers. Look at Walmart come out of that squeeze. That's what we want to look for. These squeezes on the intraday for chases. Right now, Microsoft and Walmart, not as much of a squeeze, and it's got really like $2, $3. Needs to get above 96. Gets above 96, then it can have a little bit more free space to get to 101. Last week did show a very strong set of internals higher. So the indices were higher, the select stocks, especially value, infrastructure, retail, REITs, they were definitely higher. So the bulk of my analysis said a very strong counter trend bear market rally, and it was especially in this one chart, right? Volume. We had it that 1 week, tremendous advance, and then this was the second week of tremendous advance, and we had 3 days to last week's 4 days, right? So from the high, which was on the 18th, actually in the market, the 19th, we had a strong rollover, massive distribution, flat, massive distribution, capitulation. Fed came out on that Monday, and we rallied Tuesday, Wednesday, Thursday extremely well. Now, last week, we got immediately, again, another Fed save, and the market was muscle memory, quicker. I know how this works. Boom. We went higher. Internals were really nice. We stopped on exact 55-day resistance, and now we're just churning in place, treading water. But that was my read last week. Very strong counter trend bear market rally under the surface, you know, within this market structure decline. But I wrote about this. I'm actually bullish into earnings, and why? Even though I think crude is absolutely going to sell off. Gold, silver, and GDX doing their thing in a world of actually real negative rates. But I'm not seeing anything for volatility like strong. I think we can get this move, get some follow through up to 50. Sure, for a trade, but I still don't see it until we get out of options expiration this week. Netflix is just blue skies. Okay, that's freakishly bullish, up to 400. So the 400 calls are probably getting bid up. Oh yeah, right here. The April 400 calls from this morning are up 1,000%.